it with simpler trading. My name is Joe Rokop, Managing Director of Commodities and Equities. Today is Monday, August 17th, 2020. So another interesting day in August, and by interesting I mean quite slow. A typical Monday here in the summer with not a heck of a lot of action and unfortunately not a heck of a lot of technical signals to be using in the futures market. Having said that, there's quite a bit for us to talk about today. And I am going to start with the S&P, and I'm just going to be using the S&P as a simple guide of the overall stock market, including the Nasdaq, the Dow, etc. Now I will go into a little bit more depth of those particular indices, but to start, I want to talk about these big, massive moves and these really unprecedented jumps and recoveries. So one thing to keep in the back of our mind, and I will revisit this in a bit, but stock market crashes, happen as a direct result of over-evaluation. And with that in mind, I don't think there are many people around right now that would argue against the fact that markets are quite overvalued. Having said that, we don't want to be on the wrong side of the trend either. So my thought is that we will continue to rally, okay? And we will actually make all-time highs in the S&P. So history teaches us that the market is usually a master of double counting, attaching peak multiples to peak earnings and trough multiples to trough earnings. Okay, the S&P, let's see. Let's take a look at this. Has rallied more than 50% from its pandemic low achieved here on March 23rd. And never before have I seen a market so highly valued in the face of absolute overwhelming uncertainty. And I will talk about those uncertainty factors in just a little bit. But let's talk about S&P recently. Okay, what's happened recently? And I will pull up a 30-minute chart here. So as y'all know, we are trading just under all-time highs, right? So let's take a look at what we've seen the past couple of days. So on Thursday of last week, it flirted with a record before a late pullback that ended on Friday. And let me expand this so you guys can see. So flirted with that record high up here, and these are the futures as opposed to the indice. The patterns are pretty much the same, so it's very notable or very reasonable, as it were, to analyze the futures versus the indice. Also, I like the fact that the futures are a little bit more actively traded over the 23-hour daily Globex session. Okay, so the S&P index made two failed attempts last week to take out its record close from February of this year. And this caused some investors to worry that the rally was in fact running out of steam. You can see here on Wednesday, Thursday, and again on Friday, we were unable to rally up through this 3,400 level that you see up here. Okay, we were about 10-15 points shy of that. Now history, on the other hand, suggests that market bulls shouldn't be too quick to throw in the towel, despite the fact we have made this kind of high here around 33.80. Okay, so last Wednesday we closed 1% away from its all-time finish. It flirted with that record again on Thursday before the late pullback we see on Friday. On Monday, we see it traded all the way up here to 33.83. And today, stocks closed mostly higher, okay, with a little catalyst boosted by the high flyers of the U.S. stocks, even as investors continue to search for direction as earnings season winds down and an agreement on additional coronavirus stimulus eludes Congress. Okay, so let's take a look or talk about the history of market all-time highs. And I will explain why, in my opinion, the market will in fact breach these resistance levels. We have been bumping our heads up again for the last couple of days here. So whenever the S&P has closed within 1% of a high, that milestone has been eclipsed within an average of just 8 calendar days. Okay, so the first time the market rallied and closed within 1% is back here on Thursday. Okay, back here on Thursday, and then got pretty close on Friday as well before the end of day sell-off, as you can see here. But point being is that the market in the last couple of days has closed within 1% of the all-time high. So in average, or on average, when that milestone is achieved, it will rally through said all-time high within 8 calendar days. The longest wait was 21 days following the bear market of 2000 to 2002. The second was a 20-day wait after the bear market of 07 to 09. Okay, while all of the other instances took place within 8 days or fewer. Okay, so if the S&P does hit a new high, I think investors should in fact be prepared for some profit taking. Not a lot, but a touch. And the weakness that is usually followed past highs was not terribly pronounced, meaning that when we've been within this 1% of an all-time high, it has rallied through that within 8 days. At no point did it take longer than 21 days. And once it rallied through, the pullback was small. Okay, so the moral of the story is we expect the S&P to go higher. We think there's an extremely high likelihood that it does. And after that, we would expect some selling and a bit of a pullback, but I would not expect a pullback larger of, say, 6 or 7%. Okay, the index has declined between 5 and 14% after hitting previous highs, and the average sell-off was 8% before equities resumed their rally and their advance up. Okay, and I think it will be slightly lower than the average 8% pullback after a new high has been made. Okay, so in summary, I'm expecting new all-time highs in the SPOOs. I'm long. I'm going to hold that until new highs are made. I will take some profits myself. I will look for an 8% pullback and then reload and look for that uptrend to resume. Okay? So let's look at the Dow and the Nasdaq next, and at the end of the broadcast here, I will talk about what's ahead and my thoughts on how to trade this, and I'm also going to go into Tesla just a tad here if we have time. So let's look at the Dow. So the Dow Jones lost about 86 points today. The YM futures contract settled 27,775. You will note, and this goes back to February on 2017, where the market was trading around 29,600. So at the moment, we're about 2,000 points less, right? Give or take. So the Dow is not close to its all-time high like SPOOs are, but there still is some upside potential in my opinion, especially if the ES contracts pops. I'll be looking to get long the YM here at about 28,000 and look to take 1 to 2,000 points out of it, provided the S&P makes that high and continues going for about 2 or 3 weeks. I think the Dow will come up and bridge that gap. Okay. Now, one note about the Dow, and this would apply to all stocks and all investors, is that market participants may be a bit too cavalier about the equities index burst higher that we've seen, as this is in the face of unprecedented economic calamity created by the worst pandemic in modern times, right? So we still want to be on the side of the bulls, but we don't want to be overexposed, right? There's no reason to be fading this move at this point in time. We've been saying that since March, really, is we need to follow the trend. Now, that's not saying we need to be buying up here at the highs and loading up, but if it's a shorter term trade, I think it's reasonable to assume that we will have a breakout in the SPOOs, okay, and we will breach that 3,400 level. We'll have a short-term breakout in the Dow, and we will rally up to 29 or 30,000, right? Currently trading about just under 28,000, 27,750. So we'll be looking for that rally to burst or that dam to break, and you can see the HVA levels or high volume area levels over on the right hand side of my screen. For those of you who are just listening, we'll be looking to take some off at 28,555, 28,675, 28,870, and we'll have a majority of our position covered by 29,250. Okay, and that's when we really start to get into some high volume resistance at a price of 29,320. Okay. Let's quickly look at the Nasdaq. The tech-heavy NAS composite was up about 110 points today. Futures came in and settled at 11,287. Okay, with a high of 11,300. So I would expect the NAS to continue rising, and I would expect the NAS to hit 12,000. When we were trading 9,200, I expected 10,000. Once we went through 10,000, I was looking at 11,000, and I still feel the Nasdaq has another 700 points to go, and we will hit that 12,000 target. I don't think the market. I would think when the market hits 12,500, we would start to see a lot of profit taking and have that pullback be a little bit more pronounced than we would see in the SPOOs or the Dow. Okay, so the moral of the story is here, I think the NAS has a high likelihood of popping and popping further and perhaps popping even faster especially if SPOOs go, but the pullback on the NAS will be sharper and faster than the pullback on both the S&P 500 and perhaps the Dow. I think the pullback on the Dow will be pretty quick versus the pullback on the S&P. So today we saw Tesla come in today, rallying about 11%, breaching the 1,800 level with after hours last print at 1,839. Okay, so I would think that Tesla is going to continue to rally. I continue to believe the electric vehicle demand in China is starting to accelerate here in July-Augie, or the July-Augie rollover. And that's with Tesla competing with a number of domestic and international competitors for market share, with Giga 3 remaining the linchpin of success, which remains the prize that Elon Musk and Tesla are laser focused on capturing, and I think they do have a decent probability of gaining market share in that as Tesla continues to rally. Okay, so just a bit about Tesla there. We are running a little short on time, so I wasn't able to get to crude, but just a quick thought is that rather as acting as if the uncertainty does not exist, which is the current fad, the value investor embraces it and demands a high margin of safety to reflect the unknown. Okay, now what's the unknown, and what are our biggest concerns? Number one, a fretfulness about a further fiscal stimulus from Congress. Will that pass or not? At the moment, I would say the probability is certainly lagging. We are also concerned about a China-US flare-up as the two countries indefinitely canceled plans to hold talks about Beijing's adherence to terms of a Phase 1 trade accord. Finally, of course, worries that the viral outbreak could mount a punishing resurgence in the fall or the winter is also looming here, especially in the States and potentially here in Europe as well. So if cases of the coronavirus continue to mount, and if we get a wave 2 in areas like Chicago and New York, I think that could certainly be very problematic and could spell maybe even disaster for the market and for the health of Americans. I think watching those two cities is actually a very good barometer of where the pandemic will be turning. If they can stay down in cities like Chicago and New York, that is certainly a positive sign. Some of the other cities that have been in the news, of course, are still in a wave 1, meaning they have not achieved a peak of infection followed by a valley. Okay, so we are still in wave 1 in those other cities in the south, as the peak has not been complete and the valley has not yet been achieved. So a bit of a barometer on coronavirus, in my opinion, would be looking at those particular cities. Okay, real quick here on crude oil. I am looking for crude to pop up to near $50, and that will be dependent on the SPOOs, which was dependent on coronavirus. As we all know, I think the market is not tightening as quickly as anticipated, and that's due to demand taking longer than expected to get back to normal levels. Okay, crude as an actual physical commodity responds better to fundamentals than futures, which is somewhat of an arbitrary mathematical equation. Okay. Finally, let's look at gold. Gold is absolutely on fire. Just a quick review of what we're looking at in gold. A long-term swing, swing trade I was looking at in the futures room was buying gold at 1,950 with a stop at 1,015, a target 1 at 1,990, target 2 at 2,035, and target 3 at 2,050. Okay, so we're looking to take gold up about 100 points from where we were last week, from 1950 to 1990. Our T1 was lifted today. Our T2 is about 50 points higher. And then ultimately we're looking for 2,055. So that is the state of the market, folks. Essentially, we want to be we want to be bullish. I am looking for S&P to break up through this 3,400 level. I'm looking for gold to rally up and break the 2,000 level and settle higher. I'm looking for the Nasdaq to break out over 11,300 and approach the 12,000 mark. And I'm looking for SPOOs to rally, I'm looking for the Dow to rally up through 28,000 and close the gap up to about 29,300. So thanks for tuning in, everybody. This was the state of the market for simpler trading. And again, my name is Joe Rokop, Managing Director of Commodities and Equities. Thank you for being here, and I'll see you soon. Have a profitable day.